Another flash sale of soybeans was reported to China on Monday, but that wasn't enough to pull grains out of the red. AgDay's Michelle Rook has more on the start to the trading week. Markets Now.
Welcome to Markets Now. I'm Michelle Rook with Don Rose of U.S. Commodities. We had a down day on Monday and everything but the cattle market. And Don, I want to start off talking about soybeans first of all. We continue to see that market slide, new lows for the move, and we've had a lot of bearish news, including Chinese fatigue, right?
I think we just keep taking premium out of the market as we go forward. And, I think the number one reason is all about China, and we can't get a real firm handle on Chinese buying aggressively. And then South America weather continues to be non-threatening. So I think it's a slow walk from China as just given us fatigue, if you will.
But we're pretty oversold. Do you anticipate we're going to keep going down or catch pretty soon?
Well, I think what's happened is we've reached some of these downside gap charts. Targets. We got within 1 to 4 cents on the downside. We hit before that some head and shoulders targets. So we're hitting these downside targets, which makes sense. An oversold market in a holiday market, Michelle, that we kind of measure, see if we get some kind of retracement and see if we need to work lower. And a lot of that's going to be dependent on China, and it's going to be dependent on South America weather going forward.
And corn was also lower. Did it just follow wheat? Because I know wheat made new lows for the move again.
Yeah, I think the corn market, remember the crop report that we had, the monthly one, wasn't really, it was positive, not negative, but it's just too much grain in the world market. The wheat market can't get off a center, so it pulls the corn market down, and we just kind of stabilizing in corn. The corn market actually, producer not selling, wants to find some support down here, Michelle.
And the cattle market continues to push higher. We're up to close to these 62% retracement levels in the live cattle. Do you think we're going to take those out?
Well, I think that's the target. I think, like you said, we're about $1 away from the retracement level, the 62% of the big $46 break on February cattle, and then there's another gap above the market, another dollar after that. So I think we're in this range that we're highly dependent on the cash market and on the packer and his profitability.
Okay, thanks for your analysis as always. Don Rose, U.S. Commodities. That is Markets Now.